Hi, I'm Tom Lydon here in Hollywood, Florida at the Inside ETF conference. And I'm here with Matt Mark, Adam Perlaky, with the World Gold Council. Gentlemen, gold is on the minds of a lot of advisors here at the conference. What are you seeing, Adam, that advisors need to be thinking about today regarding gold?
So in the fourth quarter, we had a lot of great momentum in the gold-backed ETF space. Yeah. That was driven a lot by North American flows, which tend to be more momentum-driven. And in January, we saw some of the same trends continue. And what's really interesting to note is that the last time we saw assets this high, the price of gold was 20% higher.
So right now, it's tougher to get gold out of the ground.
Right.
We also have huge demand, especially in emerging markets, where the average citizen has more money, so they're buying a cell phone and they're buying gold as well, right?
Yeah, absolutely.
So what other things can we expect in the future? Do you think demand will continue to increase and supply will be less?
Yeah, so supply is obviously constrained in the gold market, but we've seen some interesting trends more recently in the gold space. In particular, last year, central bank buying was higher than it's ever been since prior to the gold standard. They bought about 650 tons, and there's a lot of reasons why this can continue with de-dollarization in some of these countries in Asia, and that's really a good reason to be thinking about it.
Excellent.
And I'd add to that just the diversifying nature of demand, right? So people think gold, they tend to think of jewelry. That's right now only about half of the market. And you brought up cell phones. The industrial application is one of the smaller but the fastest growing. So think autonomous cars, solar panels, dental equipment. Gold's got a really diversified demand profile.
You talk to investors all the time, Matt. What are they saying today as we look at 2019?
It's amazing what one quarter will do, a volatility and a declining market for suddenly interest to increase in gold. And we've seen that, but increasingly what we're seeing from investors is rather than just look at it as a tail risk hedge, they're really starting to think a little bit more strategically. So our mandate is we want people to view gold as a financial asset. We want them to look at a strategic nature, and we're in a lot of good conversations, be it as an inflation hedge, a tail risk hedge, or just that overall good diversifier. So the clients we're talking to, they're leveraging Adam's research. We're putting out a lot of thoughtful research, and we're having a lot of fun.
Central banks are big buyers. Is the needle moving a little bit more these days?
Adam has the data, but how many tons did they buy over the last several years? It's a significant number.
Yeah, I mean, there's certainly continued growth in the space. Like I said, they bought 650 tons, and this is continuing to be a growing factor in the space.
Right.
Yep.
So we know there's a lot of interest among the advisor community. We survey advisors all the time, and especially through this period of volatility, alternative strategies, which gold would be considered, is a part of that.
Absolutely.
Great seeing you guys. We'll look forward to seeing you on the webcast soon.
Thanks for having us.
Thank you. Thanks, Tom.